All right. Hello, guys. It's been what, a month now? It's been about a month. Holy moly, this market. Holy moly. Let's get right into it. So last time we left off, I think it was somewhere here, February 1st-ish. And we said we'd want to see a retest of the 200-day moving average. And then something interesting happened here, the fourth, and then the way this moved. Okay, the way the market dropped right here is how corrections start. It's a very specific kind of move. I don't know how to explain it or describe it. It's just something that I've seen over the years, that the quality of the movement, the candle like that, when you're expecting a drop in the market and then you get a candle like this, these are the starts of corrections. And it, in fact, was actually the start of the down move. The thing that caused this, which I probably should have made a video of it sooner, but I just really don't think that we were going to start a bear market or anything crazy, or even go that much further than the 200-day. Like I thought it would have been about right here. But yeah, we got this overextension. So on February 4th, there was an algo trigger in the Vix that triggered the market to be bearish, triggered the Vix to be bullish. And we'll look at that in a second, but it actually triggered it and went straight down, and it's still active, which is the only reason why I'm a little iffy on this, but I'm still extremely confident that we're still going to rip out and go through all-time highs within the next 3 months. It's just the newsfeed, the algo trigger needs to get overridden. So a new one needs to happen, because as of right now, the VIX is bullish. The VIX is bullish. We'll look at it. So this happened, and another thing is, when war gets announced, the invasion, those are historically almost always bottoms. You go back to like everything. You go back to all the wars decades ago. You go back to like the North Korea missile crisis. You drop 2%, and that's the bottom. Like every time there's some sort of a war announcement, it's almost always the bottom. And it happened here, and then we dropped even further, which was super toxic. But then this is when like the missiles got shot, and we actually called it in the middle of the day on the bottom, where you'd want to buy the Russell, because I think the Russell is going to outperform the S&P this year, for at least the next 3 to 6 months. And then even if we get the correction afterwards, which I think we will, it'll outperform the S&P into 2023, because it has the lowest ratio to the S&P in history, or in decades right now. So the Russell should outperform due to the inflationary. Usually the small caps outperform larger caps in inflationary periods because they can benefit quicker than the large caps can, just in general. So everything kind of hit everything it needed to hit. There was a VIX swell here. When the VIX goes up, the market goes up here and here, which means that it's setting up for a move, so that when the market drops back into this area, that it catches it from the underside rather than it rolls over type of thing. And it literally did it to the T. There was a gap to the penny here. It was like 0.3 off of it, and it touched it and it went straight up. And one of the tells was the VIX did not spike that much. Look at the VIX. The VIX didn't spike that much off of this. If we dropped that much and we broke a head and shoulders pattern on the S&P, right? We got the shoulder, the head, the shoulder, and everyone in the world was talking about it, right? This should not have happened. This should not have happened. The VIX should have been over 45. On a true real move, the VIX should have been over 45. On a true breakdown like that. And it was only up to 38 from 31. Like, no. That's not what you would see. In fact, that's also not what you would see in the pattern of UVXY as well. You could see it hitting resistance again, double bouncing off of it, and you'd want to see, yeah. So this is just not what you would see. The pattern of UVXY is not what you would want to see. Very, very inconsistent historically with what you would see. These moves here, super toxic. I did not expect to see this, but this is super toxic, where it's kind of, this move was so violent that you kind of get like this pocket of volatility, that the momentum is still down here, and so it's just able to do this. So you end up getting a sine wave, which is represented in a head and shoulders pattern. Shoulder, head, shoulder. So you'd probably want to see some sort of something today. Maybe retest the green line again. Now, what happened here, okay, is very important. There was a news feed that came out the 23rd, right here. And then the 24th, it came out right here. This released it and went whoop, exploded, and then this one here cucked it and made it go back down. It's what happens. It's what the market, it's what these news feeds and these algo triggers create. So if you actually look at this downtrend, the entire time, you see how it's approximating it. It's getting shorter in duration. So it's getting compressed into this moment in time. So it's like the market couldn't, the market was coiling to the downside into this one moment, and it finally happened, and it just so happened to happen at the exact moment of the war. Interesting, right? So the war happens, it should be a bottom. The newsfeed releases it from the trend, and then the other newsfeed rejects it from the trend. As of right now, we're still up here, and the VIX newsfeed is still active. So this is what makes it extremely toxic. 2-4, final trades VIX. Okay, this triggered the VIX to go up. You don't believe me? You don't have to believe me. You just look at the pattern. It triggered it right here after the close. So on Monday, it gaps up. It retests support at 20 and then just makes higher highs, higher lows all throughout. And so it's still active. This means that it's still active. This is how algorithmic triggers work. They don't randomly disappear. The only way they can get rejected is on a major technical move like this, but those are the exceptions. Those aren't the rules, and you can't necessarily trade them big unless you see something like midday here where you would have bought the market and then hope you caught an overextension, right? So as of right now, this is getting super coiled. If and when this breaks, the market could have one of the most ridiculous rallies because everyone is in cash. Everyone is short who's going to be short, and everyone's waiting for everything to settle down. So not only will you have the unraveling of all the short positions, but then all the people holding cash are going to start buying, and all the people who are short will end up FOMOing back in. So there's going to be this huge unraveling if the market can only just rip out of this one thing. It's just extremely toxic because of the trigger right now. So I still think that we bottomed. I still think that this is really, really clean. This is a wave 4 of 3, 5 of 3, major wave 4, breaks the low. Just like very, very clean, breaks the low, ABC, and then wave 5 coming, which will break this. I don't know how long wave 5 lasts. This is the thing. I don't know how long wave 5 lasts. I hope it lasts 3 months. I have specific triggers, dates and things like that for when it would top, but I don't know yet. So one of the things that I've been saying is that there's an asynchronous nature to the market due to this massive coil drop, the fastest drop ever, right? You're seeing dates and timeframes. I've spoken about this a while, that there's asynchronous to it. There's a huge drop into a huge spike. So you're getting this weird coil. So as things go down, things go up, but not together. So for example, the market topped February 23rd, and the way everything was looking, I was like, I bet that this bottoms when the market tops in COVID. And what would you know? February 24th. What would you know? February 24th is when it broke down. So it's having this weird effect. So where would we top? My dates, if I had to look at it, would be something like June, somewhere in May to June, because it topped here and then bottomed here, and then also around August. It had this weird VIX swell, crazy VIX swell, probably the biggest VIX swell I've ever seen, where the VIX was going up while the market went up 7%. It was pretty intense. So something like that. So something like 3 to 6 months with this rally, and the rally would be gigantic. Like I think SPY will go somewhere between like 510 and 530, somewhere in that range. So at least a 20% rally from here. in a relatively short period of time. So it's really interesting to see that. It's not guaranteed or anything. It's just like something to notice and to acknowledge. So that's that. We broke the 200. Double bottom. Anything else that we want to look for? The Fed is considered the savior, as always. The Fed is always considered the hero in the story. Even when they're the villain, they eventually, somewhere down the line, turn out to be the savior. And what people think that they're behind the curve, I think they're ahead of the curve. I think inflation will come down and they'll raise rates, and then somewhere along the line they'll be like, wow, the Fed really knew what they were doing. And then I think in 2023 they're going to raise rates even when the economy is slowing down, and then that's what's going to cause a bear market, an actual bear market for at least 6 months. But that's not what we're talking about now. What we're talking about is the move coming. That's all that we're worried about. And people who are constantly talking about bear market, we're going to crash and the end of the world and Russia and this and debt and blah, blah, you're an idiot. I'm actually aggravated as shit of how many people who say things like this, who either have no evidence or proof, no data, no basis to go off of other than their emotions and headlines. I think that is insanely toxic. That is insanely toxic and destructive to capital and for people in the market in general. You should be buying the hell out of things right now. You should be buying the things that got absolutely obliterated. Things you want to be in is you want to be in services, reopening plays in terms of if COVID disappeared, where would you want to be? And I think there'll be like the services like the cruises and the airlines and things like Dave & Buster's and Shake Shack. I love those stocks, and Uber. Like, I love the reopening play for services this year. I think it's going to be huge. She's a forever bear. So yeah, I think those are the plays here. We're now at the daily middle Bollinger here. It's 30 minutes into the open. We're ripping pretty nicely. So, and this is going to really confuse everybody if we start to rip, because people think we're in a bear market when we're actually not. This isn't considered a bear market. 2 months is not a damn bear market. Bear markets are friggin' years. I hate people saying this stuff. And it was so obvious that we broke this uptrend. Okay, we broke the uptrend and everyone was screaming bloody murder, that we're going to crash into the end of the world. We're going to get lower lows, lower highs. And what would you know? When it happens and we break back above all-time highs, those same people are going to say, oh, huh. And whatever headline it was, they'll just blame it on that. And that's not supposed to how you're supposed to trade. You cannot be buying the tops like that and buying after everything comes peachy keen. You need to be buying when everything is a bloody mess here at potential inflection points like the middle of this day here. So this is why also October, it had a blow off bottom to the downside, we remember. So it ended up putting in a floor right here. What would you know? That just so happens to be the bottom peak of momentum, because it knows where it's going in the future. It knew it was going to break this uptrend, and so there's going to be some sort of sell-off. So this is the beauty of the stock market and waves, is they know where it's going and they know how to set up for it. And so eventually it plays out, and then you can see what it was actually doing, and then the probabilities and everything. So what I want to say is this right here, with the way it's playing out, and that the VIX is still bullish, okay? I think this is going to crack and we're going to rip, okay? But if for whatever reason, okay, nukes get sent, which I don't think happens, okay? We're not in that for at least a decade or two, in my opinion. But if for whatever reason this comes back down and breaks this is going to go way lower. And I don't even want to say it because the probability, I think, is ridiculously low. But if it breaks this, then there's going to be a huge drop, because this was a gigantic spike. You see how violent this is, right? 7% in a straight line, violent. It would be stabilizing right before a violent drop. It's like, for example, what you would see in the financial crisis. Okay, this is 2007, this is 2009 financial crisis, okay? So this is a bear market, 2007, September, this is for a year, lower highs, lower lows. That is a bear market. And as soon as it breaks down, broke down, right? What do you get? As soon as it broke down the support, you got a move bottom to top of 13.6% from bottom to top in one day. In one day, 13.6%. That is insane. And it's a reactive move of breaking support, so it needs to stabilize. Okay, if this is the bottom, great. It should not break down. If this breaks down, this just stabilized for a massive drop because it needs to do it. It's how waves work. It needs to stabilize for the drop so that it can maintain momentum to the upside. Get the fuck out. Like, now this is where you just get out. You don't think, you get out. No, it's a fake out. No, right? And that's how it works. And that's how it works. And that looks like, is that a bottom? Yeah, so same thing. Same exact thing. But I don't think that happens. Every stock looks either completely blown out. There's so many stocks that look like they're about to rip higher. So many stocks, even the memes. The memes, like we said, we called out the memes. We made it out in November that we thought it was going to blow out here, but I thought it was a small probability. It was still a probability. This is the point of probabilities, that it would end the quarter. If this failed, you needed to get the fuck out, and it would end the quarter at the low, and then sometime in Q1, it would activate. And it actually activated really early, came down into support. This was the lowest point of support. I thought that it could actually go, and it actually did that quickly. So everything is progressing pretty quickly. I thought this would really play out much longer, but everything is happening pretty quick. So we may start seeing things this next like year and a half, like the big top and the big bottom. We shall see. But we're only playing the short-term moves. So this activated on the news everyone has been waiting for, the NFT drop with AMC and GameStop. You got the activator. It slowly residual momentum into support, and then look at these candles. Look at these candles into support. Look at the quarter, baby. Look at that rounded move. Quarterly into support. You're going to get a violent rejection off that. You're going to get a residual move here in the next 3 to 6 months, like before the first half. You're going to get a violent rejection of this, and for it to go up, you're going to get a residual move of this. How high does it go? We don't know yet. I want to see that 384 get hit. I don't know if it hits all-time highs on the pop or not, but somewhere between 250 and all-time highs. This is the pop that you want to see. And if it coincides with the market top, that'll be the time to actually be selling it. It could do something. I think it might do something like this. The pop, you get the flash crash sometime this year, which I think still happens, and then it crashes into support. And then you get the final rally into 2023 until the Fed actually starts raising rates for no reason, when inflation is just moderated. And then everything explodes. And then everything that people have been worried about, like, oh my God, sell the meme stocks because it's going to raise rates. You'll get that final, this move will be the wave 5 of this. So this would be like the wave 3, the wave 4, and then the wave 5. I don't know how high this goes, but it would break all-time highs. And it would be the rally everybody's waiting for. And then the rollover, then you're in trouble. Then everyone's in trouble. So, but all that's then. This is now. We're only worried about what we see here in the short term. What happens later is, it's nice to try to set things up for later. But this happened. We got a quarterly candle that made a relatively full red. Got bought back up at the end. Perfect. The drop. And then it's going to activate. So you're looking for some sort of activation. Everything looks so good. So many stocks got wiped out, and so many stocks look like they're going to go. So if this cracks, this could be huge to the upside of the market. Stay long. I think a wave 5 is coming. And let's see. What are we at? 0.83. Oh my goodness. Off the jobless claims. Yep. All right. So also we're back above this. People don't realize this. Like, there's so many triggers for it. The Qs touch the weekly zero line next week. Do you not understand? We're touching the weekly zero line for the first time since 2019, early 2019. Talking 3 years. It didn't even touch it on COVID. Touching that, and you have this volume. Look at that volume stick. When was the last time you had volume that high on the Qs? Here, which was a flash crash in 2015, and then back in the financial crisis when the price was so low, right? You got this massive volume print. So what you want to see is this being peak down momentum. It violently bounced, and then you just get this residual out. I actually think that this was a push down. This was actually the bear trend showing its face. That's what we said when it was dropping. We want to see the bear trend show its face, so to speak. So if this is the bottom, it's up, 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 and then the bear trend comes down and then pushes down. So just like it did it here, this is how it works out. Just like it did it here, it's more visible on the S&P. In October, where it pushes down those violent days, it maintains the momentum down here, right? It revisits it, just like it did the Vix right here, and it revisits it. Just like that, this right here, this push down, I think we're going to revisit this, which is why I think we're going to be in a wave 5. We will retest this broken uptrend. We'll break the higher high. Everybody who sold in scrying bear market, you can say every bear thing in your little lexicon, but you can't fight the trend. Okay, you can talk about the debt all the way from 2009 and have missed out on like 800% of gains. Okay, you can say whatever you want, but it doesn't change the fact of the trend. Okay, so we want to see the retest of this. We want to see the Apple. Also something like this. It was so obvious. Like we've had this line on Tesla for literally since the SPY inclusion. This is a gigantic algo price. See the volume? It is a gigantic algo price. We've been talking about this since the day, and we literally said we want to see it retest this sometime this year. That's where we think the bottom's going to be, and we're already here. We're already here. This is not the drop that I wanted to see, and it's not over because it's not the drop I wanted to see. It's not over. This is not it. This is not a clean drop. We're not even there yet. So it doesn't get much better than that. Like, look at this. Look at that. You get a flash crash down into it. Look at this. Blow off bottom, open red, coiled momentum, blow off bottom into a glitch trade. Like, come on. That does not get any cleaner looking than that. Does not get any cleaner looking than that. Let's look at that 5 minute. The 5 minute looks even sexier. Look at this glitch trade. Look at that. Boing! It hit a brick wall. That's how algos work. That's how computers work. So it's like there's no sellers left here because all the people who bought back in the other year at this price, they're not selling. They didn't sell when it dropped below. They didn't sell when it went up to 1200, and they ain't selling now. So when it comes down here, there's no sellers left. It's like an air pocket, a dark pool. So easy peasy. So again, if we roll over because of the VIX newsfeed, take appropriate measures. That's the only inflection point that we're going to see right here. If we roll over below here, anything in between is whatever. It doesn't matter. Maybe we get an inverse head and shoulder, shoulder, head, shoulder, and then we rip. Maybe something like that. We'll see. But this is the trigger. This is like the line. Before it was what, 434.8. This was the line in the sand, right? And then it bounced. These were really weird coil days that you wouldn't see in a true bear market or bear move. It was so weird. It was really coiled movement. So anyway, and then it bounces off support, blow off bottom, and then goes. So we do not want to see this go below here. If it does, get the fuck out. Then you can buy your puts and sell things, but I think this is over. I think this is over. Bitcoin also activated. It rejected the MACD cross. The DMI is coming up. Looking really good. It also broke its uptrend from COVID and didn't behave like a true breakdown. If this actually broke it, it flash crashed down to 41,000 on that night. And flash crash consolidated. And then just did a little blow off bottom double bounce, and now it's back above that. That's not what you would see on a breakdown. This is showing like it broke the uptrend from COVID, and it just double bounced off a gap. It actually to like the penny down here. It double bounced off a gap. That's not what would happen in a bear market. So anything that breaks this and cracks that, you can run and run for the hills. But until it does that, you stay long, buy your things. And this rally is going to be epic. This should feel and look like 2020, where everything was exploding. All the SPACs, everything was just going nutty. That's what it should look and feel like sometime in the next 3 to 6 months. I don't know if it's going to be a fast wave or a slow wave. So we'll see. But as of right now, super bullish, and just pray to God we get a VIX trigger. pray to God we get a VIX trigger here to yeah, we'll probably close up here. We might get a retest of the 50 from the top side next week, and then bounce off going into the Fed up, and then it goes crashes down, whatever, gets bought back up, and then we have Fed week in 2 weeks. And then J-Pow saves the world. All right, that's that. I had to say my piece because everyone's freaking the F out when they shouldn't be, and everybody should have bought the dip. We literally called it at what, 1 p.m. was it? Where was it? Right here, this candle, 1 p.m. on the bottom. As soon as that happened, it's like you have to take it. You have to buy it. This could be a bottom. And that's that. Just hold on to your stuff. Stop freaking out. Stop freaking out, okay? Stop listening to the idiots saying bear markets. Just like, okay, I won't say that. Just ignore them, yell at them, block them, make fun of them, that they're bearish. And that's that. So, the line in the sand is literally the low. Anything other than that is blah, blah, blah. Also, corrections happen in usually 3-month periods. You get the drop, you get the doji effect, and then you get the reversal. It happens all the time, okay? You get the drop, you get the doji, you get the reversal. You get the drop, you get the doji, you get the reversal. Where else do we got? We get the drop, we get the doji, we get the reversal, but we didn't go. It was just a flat bottom. And then we went. Where else we got? And then 2018 was different. We got the drop, the doji, and then the drop. And this was a very specific type of move, which is why I also thought that the correction wasn't over and why we would get something like a megaphone pattern. Like things like this is what can help you with future movement. Anything else? The drop, the doji, the explosion. Like, it's very, very, very common. And sometimes you get a double. Sometimes you get that, and you get consolidation, and then you get the double. So we'll see. I think we're going to get something like that and then that. But we'll see. So here we are in March. You can see a retest of 449 on the S&P before the first major resistance of the month. And that's that. Send me peace. Have fun. Enjoy. Peace, 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 peace. Bye-bye.